Welcome back to Talking Points, which is the gathering place of smart and savvy investors, and of course, people who are looking at creating their own pension plans by means of investment in property. Now, if you ask any of the top investment brains, I think more than likely they will always say that the best way to create wealth is through property. And you may be asking why, but because that is simply because of supply and demand and the need for the right properties in the right areas. So let me know in the comments if you agree that property is one of the best investment classes. And if you disagree, let me know what you think is one of the best investments that is very sustainable and profitable. Now, at the Wealth Masters Club, we've been teaching ordinary South Africans how to invest in property since our inception in 2003. And today, almost 20 years later, we have thousands of clients who are part of the club using the services of our expert service providers. And there is one core fundamental aspect of property investment that will obviously mean the difference between success and failure. And that is, of course, making sure that your structure for the investment is correct and protected. So if you structure this correctly, then you will become a fearless investor, which is exactly what we teach you. But today we're going to be talking a little bit more, a little bit less about the structure and a little bit more about the core fundamental, which is, of course, property and property investments. Now, one of the biggest mistakes that a lot of new investors make when they're starting their investment portfolio is failing to understand all of the costs involved in purchasing a property. Now, oftentimes investors calculate their returns on affordability on the selling price, but often there are a lot of other costs involved and things that you might not know upfront. And these all need to be taken into consideration. So joining me today is our resident property expert who will get a little bit more information to you about what the core costs are in terms of purchasing a property, whether you're buying it for yourself or as an investment. Emile Grobbelaar is, like I said, our property investment expert. He's also the person that will help you when you join the club to find the perfect property in the right location, which will give you the returns that you want. So, Emile, thank you so much again for joining us today.
Damien, only a pleasure. Thank you.
Now, Emile, last week we published an article of yours, which was a follow-up on your previous article about the cost associated with buying or investing in property. And the first topic that you mentioned is a home loan initiation fee. So can you give us a little bit more information about what that actually is?
Damien, it is the cost that the bank charges the applicant for doing their bond application. The people don't really mention it very often, but sometimes the banks even charge it when you don't qualify for the bond. And most of the times, if you qualify, they grant you the bond and you accept the bond. Most of the times, they do load it on your home loan as part of that initial cost, but sometimes it needs to be paid separate. So some of our clients obviously phone me. I would say, listen, I thought the registration costs are included and the bond costs are included in the transaction, which can happen a lot of the time with new developments. But now I have to pay a 5,000 Rand or 6,000 Rand extra for the bond initiation fee. So that is determined by the bank itself, and they charge it over and above. So sometimes they require you to pay directly to them, and they don't include it in your home loan. Or also, when the transaction stipulates that bond registration costs are included, it is sometimes excluded. That specifically the initiation fee sometimes excluded from that as well. So it is in particular with regards to the application that they need to do for you as applicant.
So, Emile, how would you know if you need to pay this as a separate amount or whether it is actually included in the home loan amount?
Usually when a bond or the bank is willing to grant a bond, they issue a quote. So in there, it will stipulate what the initiation fee is and whether it will be loaded onto your home loan account or not. If you are unsure, you can definitely ask the attorneys, either transferring or the bond attorneys. The bond attorneys are only being appointed much, much later. So if you are unsure, read the quote or ask the attorneys or your agent even will be able to advise you what the situation is with regards to that.
And then in the article that you wrote, you also mentioned that you need to make provision for rates and taxes to approximately the value of 3 months' charges. So how come do you come up with the month of 3, and what is that for?
Damien, after property is registered into the purchaser's name, so he becomes the owner, it takes depending on the area of the country that you're in, but it takes about 3 months before the rates account becomes available. In the Western Cape, the account becomes available. In other words, it gets registered automatically, but places like Gauteng, you as new owner will have to go to the municipality directly, pay the deposit, open the account with your registration letter. So the 3 months provision that's being paid by you as purchaser is to cover the costs for that 3 month period before the rates account gets opened after the property is registered in your name.
And then just another question in relation to the rates account that needs to be opened. How does that work, or how do you go about that in a little bit more detail?
Yeah, as I mentioned already, it definitely differs from different parts in the country. In the Western Cape, the attorneys sends the letter of registration to the municipality, and the account gets opened automatically. So afterwards, after you waited 2 to 3 months, you can go onto their website, enter your details, and you will get your account. Gauteng, for instance, the attorneys also send the registration letter, but the buyer is supposed to go directly to the municipality and close the previous account, the previous owner's account, and open the new account with the registration letter. So it all depends on area to area. KZN, unfortunately, also works the same. Quite difficult to open rates accounts there as well, and you have to deal directly with the municipality in person. So right now, I think the Western Cape is the easiest system with regards to opening new rates accounts for purchasers.
And then, Emile, a lot of new developments are coming out now with prepaid electricity and prepaid water. But if the electricity and water is being supplied by the municipality, why would that need to be on the same account, or will it even be on the same account?
Damien, not always. Places like Ekurhuleni have two separate accounts, but you will then basically put down a deposit with regards to the services account, where they run your electricity and water on. But also, not all services gets put on that account. Something like your sewage and refuse will be billed on your rates account. So when you do go to the municipality and you open the rates account after the property is registered, you definitely need to make sure upfront whether the services to that property is being supplied by the municipality, so that you can open that account at the same time, and you will have to put down a deposit for those services as well. And yeah, it's not easy, unfortunately. The municipalities themselves also provide the prepaid meters. So rather go that route. If you are billed or would be billed by the municipality with regards to services, inquire whether they have the prepaid meter system that you can move on to. You'll have a lot less hassles.
And then what would be required if there is a separate account for the services to the property? How would that be done by the investor?
Well, it's you'll definitely have to put down the deposit and ensure that they open the services account so that you do have water and electricity. When you take it further to managing the property, that is the account that you need every month as well to charge your tenant. Otherwise, if you don't get the account, you will be billed. I mean, that's one thing where the municipalities never fail, is where they bill somebody. So it will be billed to you, and you need to recover that from your tenant. So you must make sure that you open it and that you get it so that you can recover it from the tenant.
Now, Emile, we've spoken a bit about the banking costs and the municipal costs, but now there's another cost that people also need to take into consideration with their affordability, and that is, of course, insurance. So obviously, with any new property, there needs to be insurance. So how would that work with regards to different types of properties?
Damien, property insurance is very relevant for freestanding property. A lot of people still enjoy living in a freestanding house, but that is for themselves and not necessarily for investors. The investors tend to invest in a sectional title. So if you do have a freestanding property, even if you have a multi-tenanted freestanding property, you will have to have building or property insurance to cover damages force of nature damages, etc. And that you will pay directly to the insurance company, whereas sectional title properties are being insured. The structure is being insured by the body corporate under their group insurance. So in effect, just to clarify, the outside of the property and the structure of the property will be under the body corporate's insurance, but the inside of the property will be for the owner. Not a lot of people tend to have the property insured on the inside because there's really not much to insure. If a tenant does damage your kitchen, it's not 100,000 Rand, it's usually 10, 20, 30,000. So they tend to weigh up the cost versus the monthly installment. And most of the time, they don't even insure the inside. So with regards to insurance, if you have a freestanding property, make sure that you have got proper cover for damages, especially natural causes.
And then, Emile, my last question, now we spoke about the insurance of the actual property, but life and home loan protection insurance, is this also required or not necessarily?
Damien, if you buy a property in your personal name, it is required by the bank if you take a bond on that property. They do want you to have life insurance that will cover the outstanding balance of the bond should you pass. But the way we do it and our structures, buying property in trust, you don't need, the bank won't require you to have life insurance because it is not owned in your personal name. But it's always good to have that type of insurance that can relieve the bond, settle the bond in full after your passing. So the follow-up trustees, will basically have a debt-free property or debt-free trust. But that is up to you to decide. But in your personal name, the bank will require you to have life insurance for the purpose of settling the bond when you pass.
Fantastic. Emile, thank you so much again for your incredible insights. I think everybody always enjoys the chats that you have with us. And we all know that property is one of the best investment assets around, and know that all of the details that you give always make it so much easier for an investment to plan. So now, if you want to find out more about the Wealth Masters Club and what we do, then please make sure you register for our upcoming training taking place this weekend. And there, our founder, Kurt Kutsia, will take you through the entire Wealth Masters system and show you how we invest, why we invest, and the manner in which we invest. And then again, how this can benefit you as well as your future generations in terms of protecting and growing that wealth. The links for the training are in the description below, so check that out as soon as you can. And if you enjoyed this video, please visit our YouTube channel called Wealth Masters TV. Like and subscribe, and you will always be a step ahead in your investment journey. So once again, Emile, thank you so much. We really appreciate your time.
Only a pleasure, Damien. I do enjoy it. Thank you.
Thanks, everybody. We'll see you again next week. Bye-bye.
Bye.